everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading, wrapping up February and going into March, going out for an outlook video of the 1st of March. Pretty good price action, a little bit slower than yesterday, but we are seeing a lot of whip and a lot of chop back and forth, so it's, well, we gotta hang on and hope for the best. Before we jump on into the charts here, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click the Join the Daily Outlook newsletter. From there, you'll be able to sign up for our email newsletter list to be notified every time one of these videos comes out. Of course, in that newsletter email, we also go over a bunch of stuff that we don't have time to talk about in the video, from stocks, options, crypto, anything of interest showing up will definitely be showing up in there, so make sure to sign up so you don't miss any of those. Along with that, the live trade room subscription and trial info is where you can sign up for a free 3-day trial of the live trade room. That's where you can kind of get your feet wet a little bit, hang out with us for a few days, and see what we're all about. It's a great way to kind of get in the room and ask questions and see how we trade and approach the day, and just a good way to kind of see an inside look. So make sure to sign up for that if you haven't done so already. Now, looking at the euro has continued to the downside, and we're now coming into that major area of support. This is the area of interest that we wanted to keep our eyes on at around... you know, I mean, this is the top of the range. Now, this whole area is a big zone of interest, but 22,085, 22,090, that's the beginning of the buy zone for buyers to start accumulating. Anywhere inside of this is where buyers will likely be accumulating for a while, with a lot of preference on the lower edge. Even though we are coming into the higher side, and we can definitely see there has been a bull response already. I think a lot of traders who are building into positions would love to see a little bit more to get down to the lows of, you know, around 21,410 or so. Now, I do still have those earlier wedges on that price has been stuck inside, but we do also want to keep our eyes on a potential channel down. This overall down move, you know, it is very aggressive, and we might not make it all the way down to those lows. If we do have rising support coming into play. That could be of interest. But, you know, right now we're just in a big buy zone, and as long as we're inside of here, we're likely going to go a little bit more sideways than more of a trend move, because buyers are going to be buying in on pretty much every new low, and sellers going to be trying to drive the market through that bottom, but there's just going to be more buyers there as well. So more likely going into tonight, and probably over the next few days, we're going to be a little bit more range bound and sideways as the market sort of figures out what it wants to do. Now, of course, we might just find a huge buying spike and we may never come back. That is always an option too, but the more probable situation is that we go into a little bit more of a range. Now, I am switching gears a little bit more to the buy side. We haven't seen the buyers come in yet with a full, you know, full confirmation, if you will, but definitely looking for the buyers to begin picking up these lows, and any new low that we make is likely going to be an area of interest that we want to keep our eyes on. So in the medium to long term, looking for a you know, a buying area inside of here to push the market back up towards those highs. In the short term, though, we might still continue a little bit of this downtrend. This is a very strong bear trend to the downside, and likely to see a little more continuation. If we zoom in a little bit closer here, we can definitely see that we might have a little bit more to the downside than meets the eye right here. If we look at the overall gapping that we have in play, we've already kind of completed that sort of area. So some of the gapping is already done between the candles. The only other thing would be a larger gap, which would be utilizing kind of an area like this. And if that's the case, we're looking for a little bit further bearishness down to 21,520, which does line up pretty close to the bottom of that range. So in the short term, going over the next, you know, day or so, I am looking for bears to continue to try to drive the market down. In the long term, though, looking at this area as a potential for buyers to be building. On gold, we've got a, well, it didn't quite make it down to that area of support, at least not in time, right? I wanted to see them come down sooner than later, likely on that candle. The next never made it down. We're just going into a little bit of a range. This does seem to be like a slight accumulation phase before another leg to the downside. It's the exact same thing that happened back here, same thing that happened here. Even one candle, if you zoom into something like maybe a 15-minute chart, you'd see a similar thing there as well. We get this a lot. You know, we have this bigger leg down, and now we're looking for a secondary leg, and this is left wide open kind of wick at the bottom that a lot of sellers are probably going to try to drive down to test. Now, I do think that a lot of sellers are probably looking to get down a little bit further, so we may still kind of edge our way into that little circle there, but looking for these low closes from previous does make a lot of sense. A lot of sellers will have sold down there. They've been holding the bag for quite a while, so around 1312.6 might be a pretty big area of interest as a target for the sellers to drive down. If we want to go a little bit further for a slightly more aggressive target, that'd be around 1310, but really between 1310 and 1312 is kind of that, you know, 20-tick zone or so that sellers are going to be targeting, and I'm looking for the bears to continue in the overnight session to dig down and see if we can catch some of this rising support. On crude oil, we have the overall area of interest that did catch and resolve some buying pressure to the upside, but ultimately did break down in inventories, slamming the market quite aggressively down. It was a very bearish number. Well, not super bearish, but it was a bearish number, and the sellers definitely responded in kind with a heavy breakdown. Now, we were given some clues about this, the miss on the highs of the channel we were talking about yesterday, and I think the day before that, giving us clues that we might see a further breakdown. That is exactly what the inventories gave to us. Now we're looking at this area thinking, hey, the market might just be giving us a dip into an area of interest, and that area of interest is going to be this major swing low that was put in at 60.75. Now, why specifically that swing low? Why not this one or that one or that one? This is the last time that there was another trap that formed that got the buyers involved at that monstrous spike higher. They trap below that previous swing low. So the fact that they trap below that previous swing low, and given the response of that trap, likely if we do come back to that area, buyers are going to be looking to defend their original buy to try to push the market back up again. This is coming down pretty hot and heavy. We do have a lot of bearishness coming into the market that could potentially drive the market a little bit further, but I am looking for a little bit of a bounce at the very least at 60.75 for some possible scalping. So looking past crude oil here, jumping over to the S&P, we have a little bit of a wedge breakdown, right? We had the sellers trying to come off of the highs of the wedge that worked out really nicely for a good bear drive down, and we have a little bit of pause and then a secondary leg. This is kind of what you want to see if the sellers are going to be taking over, and now this move down has brought us nearer to that level of support again, 27.03 half, not too far away. Very likely we're dealing with a situation that sellers are going to want to try to get down to at least test 703 half. Of course, we could be looking for the same situation that we were just talking about on crude oil, with a trap low below that most recent swing low. The same thing happened here. They came down to that previous swing low, ended up being a trap, and went flying higher for the next day and a half. Maybe even 2 days on that. So the fact that the buyers had so much defense there, we have a rising wedge bottom coming into play that they haven't really held a whole lot of emphasis on. We're now breaking through that. Major support below that at 3.5. And then even a little bit further at 62.82 for a possible trap low. Looks pretty good. So basically with the S&P, just kind of waiting to see if they want to dig down into some of these larger areas of support, or if we're going to pause for a little bit. One thing that obviously we do have to take into consideration is after such a big move down like this, a pause and continuation, a lot of times the markets tend to want to go sideways. If we look backward a little bit, we had the same situation here with a humongous bear move down, and it really had a hard time continuing before it reversed back up again. We might be dealing with the same situation. So we do want to keep that in mind, but we do have major support below us, 3.5 all the way down to 82 as areas of likely buyers' interest. Now, if it does go below that, a lot of buyers are probably going to be looking to kind of get out of the way, because this might just be collapsing back down to the lows. And if that's the case, you'll probably see a breakthrough, come back and use it as resistance instead. Overall, though, we do have a short-term bearish move to the downside. I'm certainly not going to be the one that steps in the way of that. So in the overnight session, looking for the bears to continue driving lower. But as we start approaching 3.5 into 82, those are going to be some areas that I am definitely keeping my eyes on for potential bouncing right back up again. So that does it for the outlook. Now, in terms of the news for tomorrow, we do have a couple things to keep our eyes on. Out of Germany at 3:55 tomorrow morning, we have the German manufacturing PMI for February forecasted at 60.3. Out of the UK at 4:30 Eastern Time, of course, manufacturing PMI for February forecasted at 55.1. And then we go into the U.S. session. Now, the U.S. doesn't have news until 10 o'clock, and that's Fed Chair Powell's testifying at 10 o'clock. So we really don't have any big news announcements until 10 o'clock. And even after 10 o'clock, when someone's testifying and there's any kind of talking or speeches or anything like that, it's not like 10 o'clock, boom, there's news. There's kind of a delay. So unfortunately, when we hit 10 o'clock tomorrow, because of Powell testifying, there is other news. Also, as a side note, at 10 o'clock, ISM manufacturing PMI forecasted at 59. But with Powell speaking, that creates kind of a time zone that we're going to have to deal with. Not just 10 o'clock, but like from 10 to 10:30, we're going to be in kind of a hot spot. So we have to be a little bit careful going into that period of time. But for the most part, outside of that, that's really all we have to worry about for the U.S. session tomorrow. After that, out of the U.K. at 1900 Eastern, we have the Bank of England Governor Carney speaking as well. So for you evening or afternoon traders, might want to keep an eye out for that. But aside from that, not too much news to really have to worry about for the U.S. session, aside from that block of about probably 30 minutes or so with Powell on the microphone. So that's going to do it for this one. As always, like we always say, doesn't matter what market you're trading, always, always, always make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we will talk to you all then.